Yes,
Marcus,
sir.
Marcus Wax, thanks for coming
Hey,
by today.
Marcus.
I actually have two questions. First of all, is there any concern with this initiative about kind of triggering a race to the bottom? You know, if we cut our taxes too much here, are we going to provoke some kind of response in Montana, obviously, because they're right next door, Wyoming, I mean, states in the region or states across the country? And my second question is, if you're talking about the long term, how does this proposal square with increasing global demand? I mean, I really don't see how, particularly with economies like Mexico or Brazil continuing to develop and getting closer and closer to what we call first world status, I guess I want to say, and then really emerging countries like South Africa or Nigeria. What comes in the future after this step? If North Dakota agrees with your proposal, I mean, what happens in the next 20 or 30 years as, say, instead of South Africa being a developing economy, it becomes a developed economy?
Right. I think we could spend the rest of the afternoon discussing this one. I mean, it's very complex, but I appreciate it. Let's talk about race to the bottom, your first comment. Will we trigger a race to the bottom? And that's possible. You always worry about that. If we lower our, we have a great business to government relationship in North Dakota. We've lowered our, they're going up now, but in the past we've lowered our unemployment taxes. We've lowered our workers' comp rates. We've built this relationship with business, and businesses from Minnesota came over here. Now, with the new governor and new legislature and everything going on in Minnesota, they're going, gee, maybe we ought to lower our business costs so that we can get some of those businesses back. And you always have to be careful of a race to the bottom. And I'm glad that was brought up. But here's the way I look at it. Race to the bottom or not, we have built a dependency once again in North Dakota on oil and gas revenues. And unless we do everything we can to keep those production values up, we're not going to be able to pay for the programs and services that North Dakota puts together. So what I would do is I'd lower the tax, and then I would do, I'm not there, obviously, but when I was there, when I was elected governor in North Dakota in 1992, about 50% of our revenues were based on agriculture, and about 25% of our revenues were based on energy. And we took a look at that and said, in the 80s, we really got hammered because both oil and agriculture, both energy and agriculture, are cyclical pieces of our economy. And you hope that when one goes up, the other goes down, and so you can balance that. In the 80s, both went down. And when both went down, we were really hurting in North Dakota. And, some of your relatives left North Dakota because of the economic turmoil that was in our state. Now, we set forth then to diversify the economy so that we'd have revenue sources that wouldn't fluctuate so much. And when they did fluctuate, you could handle it. And 8 years later, when I left office, we had agriculture as a percent of revenues into the state down into the high 20s, and we had energy from 25 to under 5. Now, part of that was driven because oil prices were so bad, But the point is, you have to start. You can't become dependent on one revenue source. And now, for the last 10 years since I've been out of office, we've reversed the effort that we did to diversify revenues. We've gotten more dependent on revenues again. So now, instead of 25% on revenues dependent on oil or on energy, we're 30% dependent, and we're going up. Agriculture has been tremendous. We've had good crops, good prices, good yields over the last years. Agriculture is a tremendous part. But we're reversing what we need to do. We're getting more dependent on a single revenue source that's a cyclical piece of the economy. So I'd lower the tax, and I'd go to work to diversify that revenue source so that if there comes a race to the bottom, you don't get trashed with the deal. Somebody asked earlier, what are the lifting costs and where they are? It depends on which company you talk to, but one company will say oil has to be at least $60 in $60 a barrel in North Dakota to work. Another company will say it has to be $80 in North Dakota to work. But what we do know is that it's expensive. in North Dakota versus another state. So we have to be careful of these values, and we don't have to race to the bottom. If oil goes to below 60, they don't have any activity, tax rates or not. So that's a good. Now your other comment about global demand, and I think where you were going with that is if in the BRIC country, I'm expanding on your comment, but if in the BRIC countries, in Brazil, Russia, India, and China, if we see emerging middle classes, big consumption increases, increased demand, then won't oil prices stay high? Is that where you're going, or are you just saying what about developing countries and consumption increases?
Well, I wasn't necessarily going to say over the next, say, decade or something,
Right.
but
Yeah.
BRIC countries and even kind of an expanded definition. I mean, if you're going to say look at South Africa, for example, just how does this tax deal with not demand today, not demand in 5 years, not demand in 10 years, but demand over the long term? Because I really appreciate what you're saying about diversifying revenue. And if we're going to rely on a natural resource as part of our revenue stream, it seems like something we should manage pretty closely.
The values of oil production globally are going down. The big Russian oil fields are losing production value. Mexico, Venezuela have crumbling infrastructures. Values of production are going down. If you look on a global basis, very few places are you seeing increased production values over a long-term basis. So, that's one thing that we have to deal with. But the reality is, we have oil in North Dakota, lots of it. We have oil in Texas and Oklahoma and Southern California, lots of it. And that's where 20 years from now we need to be competitive so that we're flushing those dollars into our economy, not in another state. We're really not competitive with South Africa for our oil. We're not competitive with a developing or emerging country in South America or Sub-Saharan Africa. I mean, we're not. But if 20 years from now it's economically more feasible to be drilling a well in Wyoming than in North Dakota, that's where the activity is going to be. And my point is, if our government's dependent on that right now, we need to do everything we can to lift it tomorrow.